What exactly are spikes and how can we build a profitable trading strategy with them? Hello, I am Tradiology and I hope you are doing great. Please make sure to subscribe to my channel and introduce me to your friends before watching this tutorial. So first, let's see what a spike actually is. A spike is the beginning of the price cycle phase and signals the start of a price move in its new direction. Spikes are strong and usually large candles that typically form when an important level has been broken and the price will most likely move in the direction of that breakout. To identify this phase easily, you need at least 3 candles. If there is a gap between the high of the first candle and the low of the third candle, it means these 3 candles together have formed a strong trend and in a higher timeframe they appear as one strong candle. Please look at these 3 candles. Do you think this is a spike or not? To figure this out, we just need to check the distance between the first and third candle. If between these 2 candles there is only the body of the second candle, it means a strong trend. If the first and third candles overlap, then the trend is not strong. Another characteristic of spikes is that the low of any candle should not go below the previous candle. If this happens, we can say we are out of the spike phase and have entered the next phase of the price movement. In general, price moves in spikes, channels, and trading ranges. The spike phase ends when the first pullback happens, meaning when the low of a candle goes below the previous candle. Spikes begin with the breakout of trading ranges and patterns, and by knowing this we can figure out where to look for this price phase. So now we understand what a spike is and usually where it begins. Spikes are the strongest phase of price movement and in my opinion the best place for scalping. Because this phase happens quickly, it is usually not suitable for amateurs since it makes them emotional and they fail to follow proper risk management. The foundation of any method and trading strategy is respecting money management rules. Otherwise, you can forget about trading because if you do not follow the rules of this specialized work, you are doomed to lose your capital. Now let's see how we can build a strong and effective strategy with this price phase. Keep in mind that you are designing a strategy based on the nature of market movement. Be sure that strategies of this kind, if executed correctly, will never expire because they are based on the essence of price movement. Always start by drawing your key levels. These levels are based on the methods you have learned and can be any method. Let's assume we have drawn support and resistance levels based on classical technical analysis. These levels have the potential to create spikes. So on this support, we wait for a pattern to break and form a spike. Look at these 3 candles. Do you think this is a spike? No, because there is no gap between the first and third candle. So we wait. But look at these 3 candles. Because there is a gap between the first and third candle, a gap has actually formed which shows the strength of the bullish trend. In probability, we cannot always predict direction correctly, but we can certainly identify whether it is a spike or another phase. This was a very important point and I hope you can fully understand it. The first strategy one want to explain is that in these cases, you wait for the spike to form. Then you set a buy limit order below the last candle with the stop loss behind this price spike. Because the probability of success in this strategy is high, you can even enter the trade for 1:1 rewards. Sometimes the spike continues and no pullback happens. In that case, keep moving the order higher under the last candle. If the spike becomes too long and the stop loss gets too large, then do not enter. Let's see an example of this strategy. In this chart, we are in a range. From the top of the range, a bearish spike formed. By placing a sell limit order above this candle, we could have traded it. Also, later when we entered the channel phase, reaching the top of the channel and spotting spikes allowed us to trade easily with this strategy. And if I show all trades together in one frame, it would look like this. Some points, as always, were losing trades, and many others were profitable. What matters is our overall result, which will be profitable. This strategy is absolutely amazing and gives you a candle-by-candle view. I am sure with enough practice and testing, you will master it and trade confidently. Please make sure to follow money management, otherwise even with the best technical methods like this strategy you will never be profitable. I hope you enjoyed this strategy. I will explain much more professional entries with this price phase in future videos. If you found this video useful, I would appreciate it if you like the video and subscribe to the channel. Have a great day.